All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. I did have a few technical issues this morning, so definitely, if you all can hear me loud and clear, do me a huge favor, drop me a one in the chat. Let's make sure that I am up and running properly. I apologize for the delay. I see the ones coming in, so all right, we are all good. So let's make sure that we start off each and every day taking massive action, that we are accepting all possible losses before entering a trade, preparing us for any outcome. Let's center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. Let's imagine our trades successfully materializing and that we obey our trading strategy, avoiding decisions based on greed and fear. And let's make sure that we're never looking back or stopping once our trade has commenced. So let's jump out of here, right? So all types of stuff going on in these markets, got the market bouncing back and forth, right? I appreciate the volatility, but man, right? What a crazy ride, right? Trying to pull it all together, right? With what's going on, we've got the market making huge corrections right now, right? When you take a look at the stock market and things like that. So, taking a look at, we see here trading economics. So, we see German business morale surprisingly falls. We've got all types of things going on. So, European shares continue to fall on disappointing earnings. So, we came out of this weekend talking about how it was going to be a huge earnings week. A lot of companies reporting on their numbers, and right out the gate, right, we see tech AI right down, right, spooked the market. We've got some growth concerns, earnings reporting that reporting earnings that are down, and so we're seeing corrections in the stock market. And then right now, though, today, right? So we saw risk off, right? And so we saw the yen strengthen as a result, the Swiss franc strengthen as a result. So we got speculation around surrounding the yen that we're going to see a possible rate hike coming out of Japan, right? So just remember, Japan is lagging, right, in regards to those interest rate hikes. So people are thinking finally we're gonna see it happen again. So we see the yen, here we see the yen climbs to a 12-week high as the BOJ meeting looms. So that's talking about exactly what I just mentioned there. Look, France business morale weakest since 2020. Swedish producer prices rise the least in 3 months. But when we talk about that Swiss franc, we saw it strengthen, right? Risk off scenario, unwinding of different carry trades, and all types of things going on that's impacting the market. But when we look at some key technical levels, as crazy as things have been, right, they kind of fall in line with a lot of the technical levels that we're seeing. So we'll go over some of those plays there. Now, moving over today, right, what is key is at 8:30, okay, we have advanced GDP, right, Q over Q for the United States and unemployment claims. So again, more of that key data coming out in regards to the US dollar as everybody is trying to project when that first rate cut is going to come, right? Is it going to be a September cut, then another one later in the year in Q4? So two cuts this year for the Fed, or is it just going to be one? So we had, I forget who it was that came out and said, I have to look back. I was getting caught up on everything yesterday. Been a crazy busy week, but has said they would like to see a rate cut as early as August from the Fed, right? And then we've seen Chairman Powell kind of change his tone a little bit regarding some of the data coming out of the United States. change his tone in regards to not being so uh you know, so steadfast in regards to that having it at that 2%. We're headed in the direction, so a little change in the tone in regards to opening up a bit to rate cuts a lot sooner than later, to avoid that recession. So some things are changing, right, with some of the rhetoric as the data, key data, is released. Well, not only in the United States, but all central banks are keeping an eye, right, staying data dependent. So at 8:30 today, okay, if you're trading, especially on those short term, those smaller time frames, um, be aware that we've got key GDP data coming out for the United States that can have an impact on the entire market. Okay. Um, Going back to yesterday, right? Because we had to cancel the session because the charts are frozen, right? Issue. Now, I've been with Smart Trader for a very, 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 very long time, for years. Um, and up until I say this year, it was pretty rare that that happened. So a lot of their new software updates, it seems like they've got a lot of bugs and things that they've got to get corrected, and they need to do it fast. But that hasn't been the trend for the majority of the time that I've been with them. So hopefully those bugs that they keep getting hit with slow down, right, and eventually come to an end, because it seemed to be happening a little bit too frequently for my liking. So hopefully they get that fixed. But we see that yesterday the statement came out 4.5 for the Bank of Canada yesterday. So the rate statement, I haven't had a chance to read it to see what the tone was in that. So I've got to get caught up there. So lots and lots and lots of things going on around the globe. Before we continue on, any questions over anything that we've covered so far? No, no. Okay. Uh, I am happy that we are about to go into August, right? And then back into the fall. Because I love the markets, right? When we get through the summertime, that's my favorite time, is going into the fall. Things tend to pick up big time. So that's it there. Again, 8:30, right? We want to make sure that we know that we've got that data coming out today for the GDP numbers for the United States. That is major today. Okay. And then at 11 a.m., I almost missed this. We've got President Lagarde speaking from the ECB. So make sure that we pay attention to that. Not sure what the topic is going to be there, right? Sometimes it's not always about uh, monetary policy as it relates to interest rates and things like that. Might be something else. So we'll have to see what forum she's speaking in, and who the audience is for today. Second, let me check something out. All right, we are all good. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Oh man, doing pretty good, man. Crazy, crazy, crazy busy week. But it's always good to find peace on the charts. So
Yeah,
I
man. I
am,
know you've been on the
yeah,
move.
yeah, yeah. So I'm glad to be back involved. Got a lot of catching up to do. Anything out there that you've been paying attention to regarding the yen or anything like that?
Um, Nothing that I've seen so far. I'm still doing a bit of catch up too, so I got some deep diving to do on some things. So um, I have some time today to do that. Um, but nothing right now.
Okay. Now, I also know, so not only are we risk off, right? There's been some moves, right, in China going on. I'm trying to find some of those articles I was catching up on. Anytime things are going on in China, it looks like they're loosening their monetary policy. Where was it? It might have been on
Yes,
Bloomberg.
it was on
Yeah,
Bloomberg. Um,
yeah. Hmm.
Cut 1 year policy rates by most since 2020.
Right. Yeah. So they're cutting rates, trying to keep everything propped up. That directly impacts the Australian dollar, right? It's they're attached at the hip. Okay, huge partners. So even before the risk off situation occurred, which typically has an impact on what, right? We know this commodity currencies, right? Including the Australian dollar, okay? As it is a commodity currency. But we already had started to see declines on that Australian dollar based on some of the monetary policy changes that China has been making. So it had already started to decline. And then when you put on top of that, um, the risk off scenario with all these earnings reports and things like that coming out, um, you see a push down, right, in the Australian dollar big time, almost across the board. So just wanted to let everybody know that in case you may know that, hey, we're risk off, but what else may be impacting the Australian dollar is what's going on in China as well. We are all globally connected, as we always say, and that's whether we like it or not, right? So just want to make sure everybody has a heads up on that. That is always important. So while I don't trade, the yuan, um, Chinese currency, I always pay attention to what's going on. Why? Because they're the second largest economy, right? Um, and especially because as it relates to the Australian dollar and also impacts the New Zealand dollar as well when we talk about that part of the world. So always pay attention to what's going on in China. Okay. Moving over, right? We take a look at the quant box, take a look at the scorecard summaries, right? So you can see pound CAD very strong. I think we saw a downtick um, uh, in oil. Again, I have to take a look at the monetary policy statement yesterday from Canada. Risk off scenario doesn't help the Canadian dollar. We see right very bullish pound CAD score 12. The Dow right has that very bullish. We'll take a look at some of that, and then so on and so forth. I will get a screenshot of this in the group. That pound Aussie, we'll definitely take a look at that one as well, as that's one that we found right as I continue to research and follow those daily levels. This was one that really worked out well for us. But for the most part, though, like we see the Dow there is as a score plus 10, but we are seeing some corrections in the stock market. So if we go over first, we'll take a look at the let's look at before we leave off of here, let's look at you can see the positioning and we can look at the latest commitment of traders report. Okay. And you can see how things are starting to shift. You see how um, that yen, right, has picked up a bit there, right? When we look at week to week. So if we scroll down, we can see where, yes, majority short orders, but you can see here on the long contracts picked up by 14.1%. Okay, in regards to the yen. So we've got the Swissy, right? Still has the majority, right, where we're short. Okay. We're short there. But we've seen a bounce, right? We've seen a bounce, okay, risk off scenario happening, unwinding of carry trades and things like that. We've seen a bounce, right? Off the lows for the Swiss franc. So we'll take a look at those things and how they align technically on the charts. If we look at we'll take a look at the uh, our risk gauge. You can see here that right now we are right on that risk off side. Okay, as we've got earnings reports coming out, right? Some major companies looking down, growth concerns, things like that. So it seems like the the big AI push has cooled off and it's correcting a bit right now based on those latest reports. So the market risk off, right, showing some concerns. So you can see here, right, bearish, right, Aussie, you got the Euro, CAD, New Zealand, gold, S&P, and you can see, right, where you've got the Swiss franc and the yen, those safe havens, and then we know the dollar can play both sides, right? We'll see what happens at 8:30 with that GDP data coming for the United States. But you can see how things shift depending on whether we are risk on and risk off in the market. If we take a look at the DXY, we can see how just ahead of the data, we're just ranging, right? And just ahead of the data, we'll see what's going on here at 8:30 and which way the market pushes based on that GDP data that comes out. All right, so lots going on, lots to pay attention to. If we come down and we take a look at the our indices, we can see where right it's been um, quite a ride. Hold on 1 second. Here we go. Chart's loading a little bit slow. Where we can see where we've taken it. It's been we the market doesn't go up forever, right? There comes a point where the market needs to correct, right? So we can see right now on the daily where we tapped into those highs and then we've been moving bearish. So again, we've got more earnings reports coming out today, but then we also had a GDP data that will impact, right? The S&P. Okay, so right now we're moving bearish into a correction, right? Do we move all the way back down to 53.28? Don't know. We shall see, or are we going to start to put in a low and continue to push higher eventually on the S&P, right? Prior to getting to that 53.28 level. But we have broken below 54.53, and we are correcting to the downside right now on the S&P, right? If we come in here, we find the lows and we put our fibs on on the daily, right? You can see where we're coming off of an 80-20 zone, right? And we're pushing down. So just below that 53.28 level, we do have a 382 retracement level. So right now we are bearish, risk off, right? You all see how it all comes together. Risk off, markets correcting, technicals and fundamentals lining up. Drop me a 1 in the chat if we are seeing how this market flows. Okay. Pulling it all together, right? And so you can see now that we know how to, work our math, how you can move, right? You can confidently move into these other asset classes. Now, if you got a smaller account, maybe not so much in the beginning, right? But if you're trading prop, right, where you've got some money, that you're playing with, you can delve, right? Someone delve into these other asset classes. Now, a lot of you're already doing that, right? A lot of you already trade indices and things like that, but you can see here, even on your US 30, right, where we're putting in a correction. Okay, so when you have your charts marked up and you're letting those trades come to you, right, you can see these, right? You can see these activities happening. You can see these opportunities that we have across the board, right? They're all pretty much putting in these corrections at the same time. We're retracing. So that's right off of a B boundary there on that correction on the US 30. Moving down. We can check this one out on the 4 to see where we sit. Let me just double check to make sure that I've got that level correct. Yep. Okay. So I want to make sure I'm good on my low. And so the way I've reset these, right? Because now I've got the ETFs and things like that that I'm messing around with. So now you can see how I don't have these all built out separately. I have all of my indices that I'm following in one workspace. Okay. So they don't all have their own separate workspace now. Okay. So let me go down to the 4. Okay. And take a look at that, right? It's a beautiful, beautiful move um, to the downside there. So let's run a 4-hour fib, see exactly what that correction looks like. there, right? So another 80-20 play, right? Moving to the downside. Okay. These zones are critical, right? So as you all are moving through, you guys know how to navigate these charts now. You're finding these setups, right? Still, right? These zones, these U-turns. Look at the daily. Like if we go back to the daily, right? We saw how it put in that high. Then when you correlate that with your lower time frames, it's right in the 80-20 zone, right? It's right in the 80-20 zone. We form the high on the daily. We bring it down through the time frames. The zone, right, is giving us that additional confirmation that we may be looking at a U-turn, right? So just like we've done always in the past, right? Just using that additional confirmation, the 80-20 zone, we put in that high, and now we're moving to the downside, right? Those are beautiful, beautiful moves, right? We had one previously here, right? Daily resistance, move down, right? And then we pushed higher, right? Beautiful 8-6 retracement, and then a move up. Okay, so the market continues to flow in those ABCD waves, right? You just have to build your confidence and hang in there, right? Hang in there, right? So no matter what the season, right? It may move a bit slower, right? But at the end of the day, it's doing exactly uh, what we think. The market's moving in ABCD ways. So here's your NASDAQ 100, okay? Correction, right? So now we've seen this across the board, right? Across the board. Those are all opportunities, right? Those are all opportunities. So if we come in, take a look at the daily, okay? Take a look at the daily chart. We'll run our fib off this low. Okay. Bring it in off the low here. So make sure I got that right. There. And then there's that bounce, right? So here we are, right? New AB boundary form. We made a new high, right? That solid black line. And now we've reversed. So let's see what happens, right? This one's in the buy zone. Are we going to continue to push and correct, right? With the market being risk off. Let's see what happens with that GDP data today and the rest of the earnings coming out this week. But you can see where we've made that correction, right? So like we always say, the fibs are just, right, the tuxedo on top of the price action. It's still all about horizontal support and resistance, swing highs and swing lows, move down, right? And so we want to make sure that we understand this all the way through and all the way around, and understand, like, don't let fibs and that complicate things, right? That's a clean swing high and a U-turn. Look at this here. Okay. Studying candlesticks right there. Look at how huge that bearish candle is. 1, 2, 3 candles, right? Took out almost 4. That's pretty strong, right? Then we formed our swing high, and then we turned over and we moved to the downside. Okay. That's a pretty sizable move. Sizable move there, right? So if it works for you to see the market more clearly, right? Taking your fibs off and just looking at the price action, right? Do it. Do it. Right? Work those levels. So that's there. So that's the NASDAQ. Right. Look at the Nikkei, right? 225 correction across the board, right? So when you have a consistent way of marking up your charts, right? And so you see, over the years I've heard so many things like, oh, each pair, each currency, each asset, each like they have their own personality. You know, you have to study and know each one. But do these all look like they're pretty much moving the same right now? Yes or no? Somebody talk to me.
Yep.
Yep, they look the same to me.
Yep. Yep. Me too. Right. So, you hear all that rhetoric, but then when you come in here and you know how to frame out your charts from the top down, you see, right? So we're dealing with indices right now, and we're pretty much seeing the corrections across the board. Okay. So doesn't matter whether it's the S&P, the Nikkei, the Dow, doesn't too much matter, right? This is what we're seeing, right? And so this is what opens the door for a lot of trading opportunities, right? So depending on your trade plan, of course, do you have to trade them all? Absolutely not, right? Look at that correction deep into the zone. Right? I'm interested to see what's gonna happen here with the yen, the strength, the way the yen strength has kicked in from multiple factors. Got some growth issues. The reports that are coming out, companies reporting out, um, as they have been all week. We see the tech sector cooling off a bit. I am interested to see, right, if these levels hold in these zones, and these are these going to give us an opportunity to buy, right? To buy the dip. Are we going to hold within these zones and settle down and find support? And will it give us opportunities to get long, right? On some of these indices, right? So we take a look at the UK 100, right? A correction, nonetheless, right? To the downside. Look at that. Okay. Get the move. Okay. Full of fibs, all right. And I'm only just for the sake of time to get through these and pretty much looking at the daily chart, right? On these, right? But we could see clearly where we ran into these levels, swing highs and swing lows, and we started to make the corrections, right? Now, this one is a bit choppier, but at the end of the day, right, we are seeing a similar correction uh, across the board, right? So we want to keep an eye on these as we move towards the end of the week, going into the next. Okay. Right. So that's another one that's pulling back pretty deep in the zone on a correction. All right. And so we've got the Russell right here. Bit of a correction, right? We know that the Russell had put in some highs, right? If you guys follow that, right? And we see how we've made this U-turn. This one has been crazy. This one has it ranged for so long before it broke out, right? Then it ranged again, and then we've had a uh, another breakout to the upside. So this one, right? We're moving midterm. So look, you can see this ABCD wave. We haven't had that new one pop up, but we should, right? That's a beautiful double bottom here on this setup. Okay. This one, way back when I had stopped following, really. But I wanted to make sure that I included again as it started to move because it was so range bound for so long. That's a long time to be caught in these in these levels here, right? But finally, we've gotten a breakout to the upside, right? We had a D extension complete, and so we'll see what happens next. On that, look at the GR30, which is now right. They've got to get this updated because the GR30 is now really it's the GR40. Um, and so we can see how this is a bit range bound here on the daily. So we need price to break out, right? That's not ideal, right? We do have a decent move. Maybe we start to push lower. We'll see. Continue to track the data, but that's gotten a little bit sticky, right? As we move through, right? So that's ranging, right? We need that to break out of this area here to see what's going on. So that one's not as clean as some of the other ones that we've seen, right? We need something to change there. Okay. So that's your GR30. And then that's it. That's all I got. That I don't know why I have the Apple one in there. But if we come any questions on the indices?
No, sir.
No.
Right. So you can see, right, through our friend as we continue to evolve, right? And Ryan and I we always were having a discussion like, well, when's the right time to start moving to these other things, right? And we felt like when you guys started that accountability group, and you just grabbing it and going and running with it, reading books, different topics and things. You're like, look, let's just continue to move through the asset classes because you all can see the approach is not different, right? Just because we switch asset classes. It's not different at all. And so once, because a lot of times, oh, I'm scared to trade that, or you hear like, oh, this is super volatile, but when you frame the market out right and you build a clear picture, you can see that a lot of that is not true, right? I hope drop me a two in the chat, right? If you're starting to see that, right? And get a better understanding of that. Like once you figure out your how to work the risk management across the asset classes, and you learn how to build out your charts, top-down analysis, the proper framework, you're like, none of this is scary. Like this is all really moving in ABCD ways, right? It just depends on, you know, uh how I want to trade it, right? Picking my spots, having my sweet spots, right? We'll look at um these are your sector ETFs, right, across the board. And you can see how these all like flow. Like for some of these, like you can see, right? Not all, but you can see how the different sectors, like look at your energy sector and things like that, how things were getting that correction that's going on. So this is a more detailed breakdown, right, by sector of the S&P, right? And we can see, I won't go into all of them, but you guys can see on my screen how we're seeing the corrections, right? Across the board, right? We have some that's up, right? But for the majority, they're making these corrections to the downside, right? So you can really start to delve further into the S&P and the different sectors to see, well, what's really driving this move? What sectors are really driving the move to the downside, right? So you can see financials there moving down, right? Industrials look moving down, right? And we see that correction. And so you could build trade plans and trade ideas off of all of this price action using the framework that we give you. So I really wanted to cover that today. That's very, 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 very important, right? Even, right, if we move into our commodities, right? And then I also wanted to show you guys how I have my workspace is built out now, right? So if you do these all individually as individual workspaces, you won't have enough space depending on your package. Um, but if you put them all in the same workspace, right? Commodities, indices, ETFs, things like that, then it makes it a bit more workable. So we can see oil here where we've got price, we've run into resistance and we're moving down. Of course, we got that gap. I believe that's where, Ryan, is this where we had the chart freeze? No, that's a
Yeah.
gap from something else. Is that what it is? Is that what happened
This,
yesterday?
yes.
Okay, okay. So we're moving down. So that is not that's a
No, no,
software.
no, no.
No, this is
For oil,
that
yes,
did
that's a
gap,
gap.
right?
For
Yeah,
oil,
because
that
this
did
is a
gap.
daily chart. Yeah, that's
Yeah,
what I was thinking.
that did
Okay.
gap.
Okay. Good. Okay. So I got that clear because I'm thinking I had to look at the chart like this is daily. Hold on. It was only one day since that happened. Okay. All right. So it did gap. So maybe we get a correction to fill that gap sooner or later, but we're moving down right now. So I saw on so we've got some demand issues, right? Possibly because where was that? Crude inventories. Uh, Oh, that was positive. That was positive. So for the US, so maybe we'll see a correction soon and see that gap get filled when we look at oil, right? But it's moving down a bit. Let me look at let's see what this report is on crude. 70 cent barrel sliding towards its lowest since early June, prevailing negative sentiment across global stock markets weighed on risk, right? Which hurts demand. Overnight, U.S. stocks fell due to a sharp sell-off in technology shares amid disappointing quarterly earnings, right? We talked about that. Additionally, the prospects of an approaching ceasefire deal between Israel and Hamas, mediated by Egypt, Qatar, and the U.S., exerted downward pressure on oil prices. Concerns about weak demand in China. Right? The world's largest crude importer, also persists following the country's economic slowdown. That kills demand, right? Recently, China Q2 growth was 4.7%, the weakest expansion since early 2023. Meanwhile, the EIA data showed a 3.74 million barrel decrease last week, the fourth consecutive decline exceeding forecast. All right, a barrel draw, right? So we got some downward pressure. Okay, done that, right? Enjoy your day. Appreciate you hopping on with us. All right. So, so we're getting some downward pressure on oil. We take a look at other commodities. We look at gold, right? We're seeing that correction that we got to the downside, right? So we're kind of back within that range, that 2450, 2287, right? Weekly levels. This is one to pay attention to today, right? As we've got GDP data coming out for the United States. So we should see a move in gold. So we'll see what happens with that across the board. Let me run this. Let me run this daily fib. Right. Let me just put a sake of time. I'll run the smart fib on it. See what we've got going. Right. Right. So still bullish, right? That's been a narrative all year, but we're kind of rangy, right? Kind of sticky. So we'll see what happens today as a result, right? Our stochastic is back, right? In that buy zone, still moving in a downwardly direction though. So we'll see. So we're stuck in that range of AB boundary, but we're trapped. We're trapped a bit. So we need a breakout. And a lot of times the data can help us with that, right? Can serve as that catalyst, right? A lot of it. And then we look at silver, right? All of these have been making quite a good run to the upside, but now we're correcting, right? As we've got some concerns globally. Can everybody still hear me okay? Yes, no?
Yes.
Okay. All right. Something shifted with my Zoom, so just wanted to make sure that we are good. Okay. Now, so let's take a look at for the last 20 minutes or so. Do you guys have any pairs before I jump into some of the pairs that I'm thinking about? Any pairs that you want to take a look at that you've been following? All right. We know what those yens are doing, right? Yens have been strong. Right. Price down. Anybody out there?
If you could check the Aussie yen.
The Aussie yen. Yeah, let's take a look at that, right? Quite the move. Quite the move. So I think did I update this already? Right. So yeah, so this is the one where we tapped. This was originally on that 4-hour where we tapped into that target and then it just collapsed, right? So we had that huge move, that huge target to the upside. Let me see. I've been revamping my chart. So hold on. Let me see if I can go back to that level. Let me put it back on. Second. And make sure we get it exactly how I had it. The fib is correct because it came, that's the one we're saying where it came within a pip. So with the FRD extension, it pretty much got there based on where we had the TP line at, the take profit line at. Because we always put it before that 1.618D extension or whatever the correlating extension is. So the fib on here is still active, right? So we actually went up to that level. See there? Came right up to that resistance line, hit that target, and then we just collapsed, right? So this one, I'm thinking right now, right? So here was your move, your 61.8 move, all the way up to that level. We tapped that resistance, and then we came. So that's like a pip. That's why that hasn't deactivated. But who was that? That's Tyrone, right? Yep. Yeah. This this daily level is broken. I think that's gonna take that A out. I think that's going
Yeah.
to take that out. We're in that risk off situation, right? I'm out of this one. I didn't catch the short move. I tracked it from the daily, right?
Mhm.
But this because I made pretty good gains on that. But I think this is going to continue short, right? We've got I think that decision is coming up for the yen, the BOJ meet. I think that's next week. Um if
Yes,
I'm
yeah.
not mistaken, it's next week. Yeah. So the speculation is for them to make a move. They're benefiting from the risk off environment right now. That we know that the BOJ intervened. So multiple factors is leading to this yen strength. So I would be surprised if it didn't move down and continue to take out this A. Here's the setup from the daily, right? So how I've been tracking these daily levels, it has been amazing to watch these play out. So you can see where we ran into that resistance, formed that swing high. Look at that huge bearish engulfing candle right there, right? That's a huge bearish engulfing candle. And then we just continue to look at that. So when you look at it from the daily, this is where I'm saying I'll be surprised if it makes a U-turn within that AB boundary. Um, because that is a pretty strong move to the downside, right? We've broken below that 99.97 level. So maybe we get back to that 97.79 is maybe where that's headed, right? And I don't even I got to bring that level down actually, right? So that's right at the A boundary on the 4, right? So it'll be interesting to see once it gets to that point and where it takes back 100% of that move. But this is huge. But so you've got the noise running on the lower time frames, but that's pretty clean here, right? So a lot of these I've just been observing, right? Setting up, looking for the swing highs to set up and then just tracking it from there. But it's been a pretty cool project. Bitcoin next week. I'll take a look at that. Yeah. AU just waiting on an entry, keep missing it. I know, right? I know. I know. It's I mean, especially as it relates to the yen, like that move to the downside, like if you weren't already positioned like in some of the 80-20 setups, it really hasn't given you any opportunity in regards to pullbacks or anything. And with now multiple factors impacting the yen. So it went from every currency was beating up the yen, and the yen was super weak, right? 38-year lows to an intervention, possible rate hike, and a risk off scenario. That's the blessing and the curse of the yen, right? And so we see it moving down like crazy. So if we move down to the 1 hour charts, right, you can see where you haven't really had an opportunity, right? It tried to create an 80-20 there, right? Sellers just kept pushing it down, kept pushing it down. So there hasn't been any pull by anything, right? But eventually, uh, because that yen strength hurts exporters, right? In Japan, eventually it's gonna settle down, find a low, and those buyers are gonna come back in. And then, hey, if we can't get an opportunity on the short off of a nice pullback, then at some point it's gonna settle down, and the bulls will come in, and everything will be long against the yen again, right? Because when we look at the data and we look at the positioning, right? Like with the commitment of traders report, we saw that, right? Still, right? We've seen the uptick, but at the end of the day, right, when it looks at the yen, you still look at your positioning, still 80%, right? Still 80%. We're seeing a correction now, like multiple factors. And then, yes, if we get a rate hike, yeah, okay, we get a rate hike, but you got to remember, right? They're laggers, right, in regards to the interest rate cycle, right? So they'd have a lot of catching up to do. But it'll eventually fall back into a position where longs will come back into play again. I don't think this is going to be a long-term trend of yen strength. I can always be wrong, but we'll see, right? But right now, sizable correction on the yen. I'll go down and just finish out these Aussies real quick. We'll take a look at the Bitcoin. Bitcoin started to make a move back to the upside, right? But since it's corrected, but we can see, right? So just continuing like monitoring these levels, right? I really enjoy doing this, right? So we can see how this one ranged on us a bit, but you can see how we're starting to break down. Okay. So this is keeping it right on these daily charts. 1 hour D spot bouncing off the daily 50 SMA. Okay. Okay. We'll work it all the way down to the one. You're talking about this Aussie NZD, right? Oh nope, the Bitcoin. Okay. Okay. Gotcha. So you can see how, right, this is starting to break through. That's a monthly level at 110.49. But you can see how we had, right, our 80-20 scenario set up, right? And that came through. Took a while. It's the Aussie NZD, right? Consolidation monster, right? But you can see how it worked its way down, right? Took a lot of patience, but we are now at TP1 and we could see TP2 on this. Okay. So that one worked out. So if you took advantage of that, right? Kudos to you. Congrats for taking the trade, right? Spotting that correction. All right. So we'll continue to watch and see how that plays out. Our Aussie dollar. Okay. Look at us from the daily time frame. Look at that. Look at that setting up. Who was that was talking to me about this last week? Three charging bears. Was that Saturday? Somebody brought this up on the can't remember who that was. You, Joy. Yep. Well, there you go. All right. There you go. Look at that. All right. Moving straight down. That is a huge move. But you can see, look at our high, look at our swing high that formed, and then we got short. So if you're keeping it super simple and planning off the daily, right? When you win all of them, of course not, it's trading, right? But your stop losses are gonna be wider, right? But if you're putting it above the high, right, that is that's a heck of a return there, right? That's a beautiful move to the downside. Okay. So just getting better, right? Using the fundamentals combined with the technicals from this daily chart and finding the moves. Okay. So we don't have a lot of wave action there. That's just looking at daily, opens, high lows, and closes and just moving short. Right. So that may work for a lot. This may work for a lot of you, right? Who are trading. Like, there's no doubt about it. Like, this is moving, right, to the downside. We don't have anywhere close to a swing low yet, right? So you're not seeing all that noise on your 1 hour, your 15-minute, right? It's just today, right now, today, this is bearish. This is bearish, right? Simple. Okay. So we can move down to the charts, right? It's not giving us a whole lot, right? We got a pull back here, but ever since then, look, it's just moving down, right? We got two pullbacks, deep pullbacks, right? But the whole time, for the most part, this is the price action within the candle, the daily candle, and it's just bearish. So if you're the type, just psychologically, like, man, I just, the pullbacks and everything, if I'm short, if the pullbacks give me anxiety, right, then the daily chart might work best for you, right? Because you're not seeing a ton of that on the daily chart. So that is bearish, right? That is bearish. Any questions on that Aussie dollar? Yeah. Okay.
Nope.
If you If you use the daily chart, just be patient because it can bounce around. It can bounce around on you. You might be looking at your terminal like, man, when is this trade is gonna go? You just have to know my risk management is good. I'm in at 1% of whatever you're risking. I'm just gonna let it play out. I'm just gonna let it play out. Right. So that's your Aussie dollar. Take a look at this Bitcoin. Right. Look at the turnover. Right. So looking at the levels, right? So here was this low. Look at our high forming now, right? Risk off market. So we know just from the time that I've been following Bitcoin, like people, I know we're thinking like, oh, it could possibly act as a safe haven. I haven't seen that yet, right? We're risk off and this thing is dropping. Okay. So yeah, we are bears, right? Look at the high that was put in, right? Even if you're waiting, right, for the swing highs to form, you have to remember, like, this is a daily chart, right? So even in that one candle is a fairly significant move from where you may enter. Maybe you spot it at the high, and then, like we said, you come down to the lower time frames. Again, you've got another trade set up that's in the 80-20 zone, right? So the correlation is there, right? Structure, daily resistance level in our 80-20 zone, and we've got to move down. They are making gold Bitcoin stablecoin. Oh, yeah, post that article. I'll be interested in it in learning more about that for sure. So here we are on this 1 hour. Okay. Here's that correction to the downside. And you have mentioned the 50, right? SMA. So I'll just put a 20 and a 200 on. Yeah. And
Well, it was the daily I was I ain't got
it was your daily chart. Okay.
yeah, I was looking at the daily referring down to the hour, but I ain't realized the four didn't pull down more.
Gotcha.
But
I'm
it's
with you.
bouncing right off the 50
Mm-hmm.
on the daily, and then I
Yep.
stopped.
Okay. All right. So let's see look, data at 8:30. We're gonna find out, right? Is it gonna break that 50 or are we gonna hold there? Right? That GDP data will be important for us. Be important for us. Look at our stochastic alignment, right? So just being patient with it, being patient, letting things line up, right? If you're gonna work to use this method, right, it makes more sense to you, right? Just be patient with it, right? So you're gonna go some days scrolling through your charts, no setup, no setup, no setup, no setup. But it's okay because look at the moves that you're getting from these levels, right? You gonna wait on the 4? Okay. All right. So that's that's how we have to think. So now, right? Um,
Because
if
can
you see,
we count this
mhm,
like if can we count this as a crown with that gap right there? The reason why I'm looking at it now to wait on the
right
four.
here, yeah, you think
Mm-hmm.
it's gonna fill that gap potentially? Yeah, potentially. You think it's
And
gonna come
then
down and
form
fill that gap?
and
Mm-hmm.
then form that next wing or arm, however you want to call it.
Yeah, yeah. I see what you're thinking there because we come through and taking out that high, right? We push through, and do we get this pullback in the zone or in this area, right? In that buy zone? We could, right? We could. We know we've got more speculation looming with rate cuts for the dollar, the GDP number, right? We'll see. We'll see. That's a great observation there, Joy. Drop you some sevens in the chart, right? Potential in the chat, right? That's pretty good there. See what happens. We'll see what happens. See if we get price. If a person is bullish, overall on Bitcoin, you want it to fall down to that low price anyway, right? Yeah, you don't want to buy. Well, I don't want to buy it from there. It depends on what your rules are, but yeah. So we'll see what happens there. This pound Aussie, right? And I don't know, did anybody take advantage of this? Right. I don't know. Are you still sitting in that from the older markup from the 4 hour on this pound Aussie, or did you get out?
I'm out, bro. I'm
You
mad
got
about
out.
it.
Because
Mad
look at
about
this,
it.
man. All of that mess, right? All of this consolidation. Like, look, right? You guys remember this when we spotted this level off that swing low?
And what's weird is I had my stop misplaced, and that's what took me out of it.
Mm-mm. Okay.
And then I didn't go back to re-enter it.
Yeah, because this was a ridiculous move. It's about 100 pips on the stop. The thing is up. That's headed towards 800 pips. That's not bad at all, right? The our Euro Aussie. Okay. You guys can see how this is it moves in cycles. Like, okay, now my Aussie is weak, my New Zealand dollar is weak. It just cycles in, cycles out, right? Look at here. Look at this move. Remember, right? So sometimes we'll set up these markups, you know, and like I say, just if you could find time just to go through and it's like, you know what, I'm just gonna click through my charts. It take me half an hour. Just go, I've got them already preset. I've done my work on the weekend. I'm letting the setups come to me. I may not have anything right now, but I've got it marked up to where if it does this or if it does that, I'm gonna make the play, right? We marked this up a long time ago, right? And look at it, right? The breakout. You said you're still mad about this one. It's all right. In time, like we're gonna figure this out, right? We're gonna figure this out. Hang in there. You see it, right? We're seeing it, right? We see these plays, right? We marked them up. Like that's a breakout if I ain't never seen one. I was thinking it was gonna push to a high price, and possible collapse. Like it continued to break through that level, right? So I was expecting a potential reaction there, but we didn't even get it. So I can kind of eliminate this now. That's still running long. That's still pushing higher. We got a little bit of a pullback, and then it just accelerated through the zone. Look at that, 166.78, and these are weekly levels. Right? So technically we get our chart set up, and then it's really just waiting and seeing like are the fundamentals going to come in and align with what we're seeing technically, and get it to move in that direction. But that is an amazing breakout there. Right? So we had a consolidation, things accumulated, and then we just broke out. Right? And the beautiful thing about that here is that we're already in this trade. So whereas, coming off that higher time frame, whereas this gave you an opportunity to get long right here with this morning star. Okay. Gave you an opportunity to get long. Right. But this one, right, if you were waiting an opportunity here, it didn't really give it to you based on our sweet spots. It just kept running. But if you were in this off the breakout from the higher time frames, then it doesn't matter. You're already involved in it anyway. I guess that's the beautiful thing about that. Okay. All right. Take a look at this Euro CAD. Okay. So I'm all about, you know, making this, I want this to be super fun for everybody and an awesome experience, right? Making it as simple as possible, right? Look at the low, right? Here's another low that formed off the pullback, right? And then we see the move just continues to accelerate up. Like here is this Euro CAD right here, just moving. That's a beautiful play here off the weekly level, moving long. That gave us a really nice pullback there. So we expect that to eventually move into that D extension. Okay. Oil prices down, CAD pressure, right? Risk off doesn't help the CAD. You have to go back and read the rate statement yesterday. I'm guessing it might have been pretty dovish, right? Because we see that Canadian dollar, right, is weak, right, across the board. This is one I want to take a look at too, this Euro GBP, because this is one that we spotted. We spotted this one, and see what it's like on a daily. Like, look at this, right? So look, we were looking at this. Look at what it's trying to do, right? It's trying to push. Right? Look at this play here. Look how that ended up taking shape. Oh, right? We got this. We got this. Any questions over anything that we covered today?
No question.
All right. So, like Ryan said before, like even in our summer months, right? Understanding the sequence, understanding the top-down analysis, how we're marking our support and resistance, right? The market still gives us opportunities, to be involved, but it does require us to be patient and as always using proper risk management. Ryan, anything before we close out? Great session, everybody.
Great session, very much so.
All right. Everybody, enjoy the rest of your day, right? I'll be back here tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. And everybody, I will see you tomorrow at 6:30, right? We have accountability tonight?
Yes, we do.
Is that on for tonight? Okay. All right. Well, again, we have the accountability session tonight, right? At 6 p.m. And so everybody, right, who can make it, please do. They are doing some amazing things inside of the accountability group. Are we still studying the candlesticks?
Yes, we are still studying the candlesticks. We're actually going to, ironically, I was doing support and resistance tonight. So this is all falling into what you've just gone through today, which is amazing.
Mm-hmm. Awesome. Appreciate the feedback. Well, hey, that should be quite interesting tonight. So if you can make that accountability meeting, definitely make it. But with that being said, everybody enjoy the rest of your day. Appreciate you all for being here. Bye for now.